You do not always need a raise. Sometimes you need a lower financial floor. Because if your life costs too much before you even get to make a choice, more income will not feel like freedom. It will feel like a slightly bigger paycheck walking into the same crowded room, where rent is already waiting, the car payment is already waiting, the credit card minimum is already waiting, the insurance bill is already waiting, the phone bill is already waiting, the subscriptions are already waiting, and the lifestyle you built last year is already holding out its hand. Most people think the solution to money stress is more money, and sometimes it is. But for many people, the real problem is not only the size of the paycheck. The real problem is how high the monthly floor has become. Your financial floor is the amount of money you must pay every month before life gives you any breathing room. It is the money that has to leave just to keep your current life standing. Rent or mortgage, car payment, insurance, utilities, phone, internet, debt minimums, subscriptions, childcare, groceries, loan payments, buy now, pay later plans. Anything that must be paid before you can feel optional. The higher that floor is, the harder your life becomes, even if your income looks good from the outside. This is why someone can make $5,000 a month and still feel trapped. This is why someone can get a raise and still feel broke. This is why someone can work overtime and still feel behind. Their income may be rising, but their floor is rising with it. And when your floor rises as fast as your income, you never feel like you are moving forward. You are just running on a more expensive treadmill. The dangerous thing about a high financial floor is that it does not feel dangerous at first. It feels normal. A nicer apartment feels normal. A newer car feels normal. A better phone feels normal. More subscriptions feel normal. Eating out because you are tired feels normal. Financing something because the monthly payment is small feels normal. Using a credit card because cash is tight feels normal. Then one day, normal becomes heavy. The life you built for comfort becomes the life that keeps you under pressure. And the pressure does not come from one huge bill. It comes from the fact that every month begins already loaded. Before the month even starts, your paycheck already has orders. Go here, pay this, cover that, catch up there, keep this service, maintain this image, protect this lifestyle. And after all of that, you wonder why saving feels impossible. You wonder why investing feels far away. You wonder why one unexpected bill can ruin the whole month. It is not because you are weak. It is because your floor is too high. A high floor steals flexibility. It makes small problems feel like emergencies. It makes ordinary expenses feel threatening. It makes every decision emotional because there is no space between income and obligation. When there is no space, you do not choose calmly. You react. You swipe the card. You delay the bill. You take the payment plan. You promise yourself next month will be different. But next month arrives with the same high floor and the same pressure returns. This is why a raise alone may not save you. A raise can help, but only if you do not immediately build a more expensive life around it. If every increase in income becomes a bigger apartment, a newer car, more convenience, more debt, more automatic charges, and more lifestyle pressure, then the raise does not create freedom. It creates a higher floor. And once your floor rises, it is hard to lower because fixed costs are sticky. You can skip a restaurant meal tomorrow, but you cannot casually skip rent. You can skip a new shirt, but you cannot casually skip a car payment. You can avoid one impulse purchase, but you cannot easily avoid a loan contract you signed for 6 years. That is the difference between spending and structure. Spending happens once. Structure repeats. Spending can be adjusted quickly. Structure follows you every month. The wealthy understand this better than most people think. Real financial strength is not only about making more. It is about keeping your required life costs low enough that you always have room. Room to save, room to invest, room to leave a bad job, room to survive a slow month, room to handle a medical bill, room to say no, room to wait, room to breathe. A low financial floor is not poverty, it is power. It means your life does not require every dollar you earn. It means your paycheck does not arrive already exhausted. It means you can keep money without needing a perfect month. And that is where freedom begins. Not when you make the most money, but when your life stops consuming almost everything you make. Imagine two people get the same raise. Both earn an extra $500 a month. The first person upgrades immediately. A higher car payment, a nicer apartment, more food delivery, a new subscription, a bigger phone plan. The extra money disappears and their floor rises by $500. Now they need the raise just to maintain the new normal. The second person keeps their lifestyle the same and lets the extra $500 stay. That money becomes savings, debt payoff, emergency protection, investments, and options. Same raise, completely different outcome. The difference is not income. The difference is floor control. This is why you should be careful with anything that turns into a monthly obligation. Monthly payments are seductive because they make expensive things feel small. A $500 payment sounds easier than a $30,000 decision. A $50 subscription stack sounds easier than $600 a year. A $20 app sounds harmless until it joins 10 other charges. But your future paycheck does not care that the payment felt small when you agreed to it. It only knows that another piece of it is already claimed. Every recurring payment raises your floor. Every debt minimum raises your floor. Every lifestyle promise raises your floor. And when the floor gets too close to your income, your life becomes fragile. Fragile does not always look poor. Fragile can look successful. Fragile can drive a nice car. Fragile can live in a nice apartment. Fragile can wear good clothes and still panic when an unexpected bill appears. This is one of the hardest money lessons because society often rewards the appearance of a high floor. People notice the car. They notice the apartment. They notice the vacation. They notice the upgrades. They do not notice your margin. They do not notice your emergency fund. They do not notice the payment you refused. They do not notice the debt you avoided. They do not notice the peace you protected. But your life notices. Your nervous system notices. Your future notices. A lower financial floor may not impress strangers, but it protects you when life changes. And life always changes. Hours get cut, prices rise, cars break, health changes, family needs help, opportunities appear, jobs become unstable, markets shift. When your floor is low, these changes are uncomfortable but survivable. When your floor is high, the same changes can become disasters. The goal is not to live small forever. The goal is to build a life that does not collapse when one thing goes wrong. The goal is to create distance between what you earn and what you must spend. That distance is your power. That distance is your margin. That distance is where wealth grows. If you want to change your financial life, do not only ask, how can I make more money? Also ask, how can I make my life require less money every month? That question is not about deprivation. It is about control. It is about separating what genuinely improves your life from what quietly raises your pressure. Start by calculating your floor, not your ideal budget, your real floor. Add up everything that must be paid every month before you feel free. Housing, transportation, insurance, utilities, minimum debt payments, phone, internet, subscriptions, childcare, groceries, basic obligations. Then compare that number to your take-home pay. If your floor is too close to your income, that is why you feel trapped. The number might be uncomfortable, but it is also useful. You cannot lower a floor you refuse to measure. Once you see it, you can start making decisions with more honesty. Ask which parts of your floor are necessary, which parts are negotiable, and which parts were created by old versions of you. Some costs are hard to change quickly. Housing may take time. Transportation may take time. Debt may take time. But time is not a reason to ignore them. Time is the reason to start. Pick one area, one bill, one payment, one recurring charge, one habit that became structural. Lower it, remove it, or stop it from growing. The first win does not have to be huge. Canceling a small subscription will not make you rich overnight, but it teaches your money to stay. Paying off one small balance may not change your life instantly, but it removes one claim from your future paycheck. Choosing not to upgrade your car may not look exciting, but it can protect thousands of dollars of future cash flow. Staying in a slightly less expensive apartment may not feel glamorous, but it can give your life room. Room beats image every time. One of the biggest mistakes people make is raising their floor during emotional moments. They feel tired, so they buy convenience that becomes routine. They feel behind, so they finance progress. They feel insecure, so they buy status. They feel stressed, so they purchase relief. They feel like they deserve more, so they make a long-term commitment based on a short-term feeling. But a feeling that lasts one evening can create a payment that lasts years. That is why you need rules before emotions arrive. Decide in advance what kind of monthly obligations you will not take on. Decide in advance how much of your income can go to housing. Decide in advance how much car payment is too much, or whether you want a car payment at all. Decide in advance that raises will not automatically become lifestyle upgrades. Decide in advance that if a new payment enters your life, another claim must leave. These rules are not restrictions, they are guardrails. They protect you from building a life that only works when everything goes perfectly. The lower your floor, the less perfect life has to be. That is the hidden beauty of a low-cost life. It gives you forgiveness. If you make a mistake, you can recover. If income drops, you can adjust. If an opportunity appears, you can move. If you need rest, you can take it. A high floor gives you no forgiveness. It demands performance every month. It tells you to keep earning, keep pushing, keep paying, keep maintaining. It turns your paycheck into a survival tool instead of a wealth-building tool. And after a while, you may start to believe that this pressure is normal adulthood. But pressure is not proof of success. Payments are not proof of progress. Busyness is not proof of building wealth. Sometimes the most powerful financial move is not adding something new. It is subtracting something heavy. Remove one payment. Lower one bill. Sell one thing that keeps charging you. Stop one upgrade. Renegotiate one service. Choose one cheaper normal. The world will constantly invite you to raise your floor. Ads will tell you that you deserve better. Lenders will tell you the payment is affordable. Apps will make spending frictionless. Friends may normalize expensive habits. Social media will show you lifestyles without showing you the monthly obligations behind them. But you have to remember that every dollar you commit is a dollar that cannot protect you later. Every fixed cost you add reduces your future flexibility. Every upgrade has a shadow. The question is not, can I afford this today? The better question is, do I want this to become part of my floor? Because once something becomes part of your floor, it changes the way your entire life feels. It changes how much risk you can take. It changes how calmly you sleep. It changes whether you can save automatically. It changes whether you can invest consistently. It changes whether you can leave situations that are not good for you. A low floor gives you choices before you desperately need them. A high floor makes you wait until you are forced. This is why some people with average incomes build real wealth, while people with higher incomes stay stressed. The average earner may have a low floor, high savings rate, and patience. The high earner may have a high floor, expensive commitments, and no margin. Wealth is not just what comes in. Wealth is what stays after your life has made its demands. If nothing stays, income is only passing through. If money stays, even slowly, your future begins to change. You start to build an emergency fund. You pay down debt faster. You invest without panic. You stop depending on perfect timing. You stop needing every paycheck to rescue the last one. That feeling is powerful because it changes your identity. You stop seeing yourself only as a payer. You start seeing yourself as an owner of your paycheck, an owner of your choices, an owner of your future. And ownership begins when your floor stops eating everything. So before you chase the next raise, look down, look at the floor. Look at the bills that automatically pull money away. Look at the commitments that once felt normal, but now feel heavy. Look at the payments that were easy to accept and hard to escape. Look at the lifestyle costs you inherited from comparison, pressure, boredom, or convenience. Then ask yourself, which of these really deserves a permanent place in my life? Not everything has to go. This is not about punishing yourself. It is about choosing consciously. Keep what matters. Cut what only keeps you busy. Pay for what truly improves your life. Refuse what only raises your pressure. If you want to enjoy your money, lower your floor first. If you want to invest more, lower your floor first. If you want to feel less afraid, lower your floor first. If you want a raise to actually change your life, lower your floor first. Because when your floor is low, a raise becomes powerful. It does not get swallowed immediately. It creates a gap. That gap becomes savings. Savings becomes security. Security becomes confidence. Confidence becomes better decisions. Better decisions become wealth. But when your floor is high, a raise becomes fuel for a more expensive version of the same stress. More income enters, more obligations appear, and the feeling never changes. Do not let that happen. Protect the gap between what you earn and what your life requires. That gap is not leftover money. It is your escape route. It is your opportunity fund. It is your peace. It is your ability to say no. It is your ability to say yes at the right time. The lower your floor, the wider that gap becomes. And the wider the gap becomes, the less your life is controlled by fear. You do not need to become extreme. You do not need to live with nothing. You do not need to remove every comfort. You need to stop letting comfort become a permanent obligation without a serious conversation. You need to stop measuring affordability only by the monthly payment. You need to stop assuming that making more will fix a structure that keeps expanding. You need to build a life your current income can carry with room, not a life that requires your future income to behave perfectly. That is the real flex, a life with room. A paycheck that is not already exhausted, a month that can absorb surprise, a bank account that does not empty itself on schedule, a raise that actually stays. Most people are taught to chase a higher ceiling, better job, bigger income, more opportunity, and those things matter. But if you only raise the ceiling while the floor rises underneath you, the room stays the same. You need vertical space. You need the gap. More income can raise the ceiling. Lower fixed costs lower the floor. Freedom is the space between them. So do both if you can. Earn more, but do not let your life instantly cost more. Grow your income, but defend your margin. Accept the raise, but refuse to assign it before it arrives. Let some money remain unclaimed. Let some money stay quiet. Let some money become protection instead of proof. Because you do not need every dollar to perform for other people. Some dollars should work for your peace. Some dollars should work for your future. Some dollars should wait patiently in case life changes. A lower financial floor gives those dollars a chance to exist. And once they exist, everything begins to feel different. The paycheck feels less temporary. Problems feel less threatening. Choices feel less desperate. You begin to understand that freedom is not only a number you reach someday. Freedom is a structure you build now. A structure where your life does not consume every dollar. A structure where your required costs leave room for your actual goals. A structure where raises expand your options instead of expanding your pressure. So no, you may not need only a raise. You may need a lower financial floor. You may need fewer fixed claims, fewer automatic charges, fewer long-term payments, fewer lifestyle promises, and more room between income and obligation. Lower the floor, and the same paycheck can feel different. Lower the floor, and the next raise can finally matter. Lower the floor, and your money can stop disappearing before it has a chance to become anything. Lower the floor, and you give your future self something most people never protect: space. And in personal finance, space is not empty, space is power.